Most of you might not know what dot-com revolution was. Some of you might. Fintech revolution is the big one that's going to hit us, and it's actually already hit us, and it's garnering a lot of interest globally, regionally, Singapore, ASEAN, everywhere in the world as well. I will also talk about why sudden growth in this sector. I will touch upon the revenue models as well, how the digital pure play bank make revenues. Of course, that's the most important thing because you're setting up business to make revenues. Not different from what traditional banks do, but a slightly different orientation, which I'll talk about. I will also talk specifically about ASEAN and Philippines in particular, because as I said, in a year and a half, I was involved in a bank license application in Philippines, which we successfully kind of rendered. We got the banking license. And I've kind of learned a thing or two about Philippines and ASEAN, excluding my discussion in ASEAN Philippines would be more from non-Singapore ASEAN context, because I had focused on countries with large inclusion, unbanked population, which I'll share some knowledge and learnings that I have. I will also talk about challenges in Philippines and how a digital bank or fintech can overcome it. These challenges would be very similar in Vietnam and Indonesia and Myanmar, not so much in Singapore, because Singapore is an anomaly when it comes to ASEAN. I'll discuss that perspective, the non-Singapore ASEAN perspective there. And of course, I'm very briefly touch upon how technology has evolved. I'll give you just a kind of a brief introduction of how do we look at technology from a digital banking perspective and how different it is from your traditional banking system as well. So that's a quick kind of agenda of my discussion. A very simple definition that's available in Wikipedia. Digital bank, also known as neobanks. They are online only bank. There is no physical branch. There's no tellers, there's no bank fronts of sorts, so you would not see massive buildings around. Everything is online, right from opening an account to doing all your transactions online. Of course, we have offices and call centers, but we won't see branches of sorts in digital neobanks. In onboarding, I think that's the main difference between onboarding. Now, traditional banks have also started onboarding purely from mobile and online perspective. Essentially, you fill a form. You take your identification photo, you upload your selfie, the OCR technology does a match between your face and your IC. There's a AI-based machine learning technology that tells whether this IC is fake or real, so it has some algorithm built in and you're onboarded to the next step. And if you pass all the steps and you're not involved in any list of anti-money laundering or politically exposed people, you are able to open an account in a very straight through, under 4-minute type of a process. So that's the kind of a quick, and then you are able to do your transactions and all the stuff as well. So the quick about Neobank. Now, this whole neobank phenomena started around 2014, 2015. More specifically in Europe, where Monzo, Revolut, N26, these banks started to come up. And suddenly you saw a lot of people actually downloading these apps, and you had 1 million users in 1 year, and suddenly the usage base started to grow. And from there were other European countries that started to see their own percolation of digital only banks. I'm talking about neobanks as a digital only banks, like no physical, like DBS has a digibank. So I don't consider DBS as a digital bank, but digibank is a digital avatar of traditional bank. I'm talking about pure play, 100% digital only banks. Then suddenly you have and double digits growth happened in terms of new banks coming up. America picked up to the bandwagon, and suddenly you had many startups coming, pure play digital banking startups coming in Americas as well. And in a recent time, you would have seen a little bit of news coming out of ASEAN and Asia as well. ASEAN has been a late to pick up. So if you look at the numbers of startups in Europe, currently 40 startups in digital bank, 22 in America, Asia about 9+, growing in numbers. But I'm sure while we are talking, there are 1 or 2 or more planning to come in next quarter. And Oceania, I think Australia, there was a Judo Bank, Ninja Bank, and a couple of other banks that launched recently in Australia, pure play digital bank. So ASEAN has been a bit slow in the progress, but things are started to happen. You would have heard about Hong Kong releasing 5 licenses. you guys would have heard about. And these licenses are for non-banking players, all right? So of course, some non-banking and banking players as well are coming in partnership in Hong Kong. But in Singapore, there are 5 licensing be offered across wholesale banks, retail and consumer retail banks. You would see similar announcement has happened in Malaysia as well, and Philippines, of course, has not created a category as such, but have started to allow. So you'll see a lot of talks on digital banking happening in the next year, or the 6 months or next year to come, and you will see a lot of new players and a lot of excitement in this field, starting from Singapore as well. Okay, I just wanted to kind of show you that unicorns, the billion-dollar companies, and there are more unicorns. I haven't included more digital banking unicorns that have billion-dollar and above valuation. Like Tinkoff, I missed. My bank, I missed. I think there are a couple of other banks. So there are more to list. The reason why I'm showing you this is that within the digital bank, this is only digital banking. If I take a fintech category as such, where there's payment and insurance technology companies as well, there's a huge list of unicorns, right? And then you suddenly see that that within this fintech sector and digital banking sector, you have a billion-dollar valuation of the company happening overnight in 1 year, 2 years, 3 years. So the speed of valuation of this company and growth has been phenomenally high. Of course, WeBank stands out. I mean, any Chinese company would stand out because of the large population and digital penetration. So that's like the highest valued digital bank in the world. No surprises, Tencent has investments out there. Then you'll see Nubank, which is a bank in Brazil, which has grown substantially high. The trajectory of WeBank and Nubank is slightly different to Revolut, N26, Monzo, Oaknorth, and Atom, which are digital banks as well. Now, if you look at this list, they are quite serious investors. The investment market is quite bullish in fintech, and more specifically in digital banking space. But if you see on the list, most of the neobanks are not really making money. I can talk about Monzo, Revolut, N26, and other neobanks. And the reason bank is because I think they are on a growth phase. They are growing operation. The cost per customer is getting down. The profitability is not high because the product category is not evolved as much. But eventually, they will start to make money. But banks like WeBank and Nubank, which are more emerging market banks, has already started to make a lot of money and profitability. Tinkoff in Russia is also profitable as well. But all the other new banks are kind of, I wouldn't call it they are ad as Uber or WeWork, but they will definitely have turnaround short time for sure. But a lot of excitement. You will see $100 million, $200 million investment, Series C, B, C investments happening across in the world. So I just wanted to kind of show you that there's a lot bigger list than this, but there's a lot of excitement from the investment perspective as well. Now, a little bit of why this growth has happened in the neobanks as such. So let me talk about the European aspect of growth and phenomena first, because as I mentioned, this whole thing started from Europe first and became big in America and coming out to our part of the world as well. So one big reason why Europe saw a sudden uptake in new customer on this fintechy oriented digital bank was a lot of people in Europe and in America don't trust their banks as much anymore. I'm sure you might have remember the Lehman Brothers crisis and banking crisis. So it has left a lot of bad taste in mouth of the people, and there's a lot of lack of trust in the banking industry. So people don't perceive that bank has my trust in their heart. They always perceive that bank has their own interest, and they do a lot of dodgy stuff in banking, because I've heard a lot of negative news in the banking. So a lot of common person is their disposition towards banking, traditional banking, is not positive in Europe anymore. So that used to be in olden days, because yes, there have been a lot of banking crises in the recent 10 years and 2 decades. So it has left a lot of bad, and I think that propelled these fintechs upfront. And one thing they did very nicely was they banked on transparency. Now, when it comes to transparency, you have no idea about the fine prints that your traditional bank has. You try to go and break your housing loan or any personal loan, they will say that you have to pay 10 fees, or there'll be a lot of fine prints in that. Now, neobanks, when they came out and they said, we are fully transparent, here's what we charge and here's what we don't charge you. And that was very refreshing for people in the Europe, because they said, hey, there are many amazingly transparent banks, and this is not what we know banks to be. So that was another factor where people started to latch onto this phenomena. Other thing was a lot of digital bank, they could actually do away with fee or ATM fee or transfer fee, because their running cost and the technology cost is lower compared to the traditional bank. So that was also, it might be like, let's say you're using your debit card or a credit card in a supermarket, and there's a fee that retailer pays. Sometimes it's passed to customer as well in some cases. That is divided among Visa, MasterCard, and the merchant bank and the acquiring issuing bank as well. And then everyone gets 0.2, cents. So there was those fee were being added up, but these banks came in and they said, you know what, we won't charge you for ATM transaction or some kind of ATM. Sorry, I kind of digressed a bit, but for the transaction for that, some banks say we won't charge you any fee for ATM transfers and all. Another thing they came back with was spend dashboard and PFM as well. It's not a big thing, and now a lot of banks have this in their mobile banking app, but it was quite a refreshing thing to see that as soon as you spend, suddenly your dashboard, financial dashboard, is categorized in terms of groceries you must spend, ATM withdrawals, in terms of alcohol you've been consuming on Fridays. So you see your whole financial life, and it was a very simple thing. And they started introducing something called budgeting. You can budget across different categories. It's a simple thing, and where people started to feel, hey, this is the type of bank that helps us to save and manage our financial life. My bank has never done this in the past. So that was a little refreshing as well. And plus, they have a better onboarding and a better app experience than your large banks, because you got to understand that large banks essentially have have a legacy processes and system that makes the front end experience very clunky, where these digital banks don't have that issue. So when they do the onboarding and experiences design from their experience perspective, is much leaner, simpler, and much more kind of user friendly. The last thing why the bank grew in Nubank and Tinkoff and emerging market is, now I'm going to talk about a last point, which is more emerging market centric, is because in countries like Brazil and Russia and other African countries, there's a large banking inclusion segment which have not been banked. So so the growth was very natural, because they saw that actually I can use my mobile phone to open an account, and I can deposit to a little shop or withdraw cash from a shop or an ATM anywhere I want to. So that made these kind of banks more accessible, and you'll see that this accessibility that digital banks can provide would help from an inclusion segment perspective as well. So very top line on why this growth happened over the last few years. Another thing that I want to talk about is traditional banks' challenges and what are they facing. And obviously, some of the traditional banks are very robust and solid. Means they have very good management and skill sets. Eventually, they will figure out and they will compete in a very different way. And some have already started to. But the reality remains that the traditional banks are challenged with high operation cost. Means if you go around and see the amount of buildings that you see from traditional banks and the branches and all this stuff, and the people that you have is phenomenally higher compared to a digital bank. Case in point, I think UOB has about 25,000 people and many buildings. And they have a few million customers, and Monzo on the other hand have 3.5 million customers. They have 800 people running the whole bank, and of course it's not an apple to apple comparison, because UOB is much larger when it comes to asset under management. They're huge, and you can't do that comparison. But I'm just trying to contextualize that a digital bank is much leaner in terms of operation from a traditional banking perspective. So that's the difference. And of course, you have unattractive interest rates. Like if you go to bank right now and you want to deposit money, and they will offer you 0.5% right now, and they will let you, your personal loan would be 6%, right? So both unattractive both from deposit and lending perspective. The convenience and speed, as you know, means I'm sure most of us have experienced the convenience and speed or lack of it in traditional banking perspective, and that still masks them. And a lot of banks have actually done a lot of investment in technology and processes, but they're still not able to crack the way that digital banks have cracked in terms of convenience and speed terms. Another thing is legacy tech and processes. Now with legacy tech, when the bank started to build their technology infrastructure, they started to build from a very monolithic technology. So everything was bolted on to a software, and it becomes bigger and bigger and bigger and became dependent. So one thing falls, other thing fails kind of a scenario. And it's because of this legacy tech, they find it extremely hard to launch new products and services very fast because the way the architecture is defined and the agility is not there. Whereas in a neobank or digital bank, you can launch a new product in a week time or a 2 weeks time, depending on the complex. It's so simple because the whole architecture, the design system, the platform microservices environment lends itself for that speed, which the traditional bank don't have that. So it masks the agility. Now, the last point I see is traditional and conservative lending tools and policies. Now, this might not be that important in Singapore because Singapore is you have a credit bureau that have records of all of us, and all the data is available. So each bank, when you apply for a credit card or a loan, they know exactly what your limitations are, and they will reject or approve based on that credit bureau. But see, Singapore is a very efficient country when it comes to bureaus and stuff. But when I apply the same process into Philippines or Indonesia and Vietnam, the credit bureau doesn't even cover for 20% of the population. So now 80% of the population might not have those typical new, like first world kind of credit bureaus that have all the data of income and accounts and lending and loans and stuff, right? Because a lot of them is informal economy that goes in these kind of the world. Now, traditional, whereas with fintech, when they come in, they start looking at different risk assessment models. So they look at mobile usage, they do their social media data, they look at your telco data, they look at your e-commerce data, and they layer it with the traditional data, and they start creating a new risk model, and they can have a larger pool of people that they can lend to. Whereas traditional bank have been very slow in actually using that. They're still stuck with that little traditional mindset. On the neobank also, they have a problem as well. Means not neobanks are not perfect as well. Not, I won't say problem, but a little limitation. When neobanks launch, they usually launch with one or two product category or maximum three, because the whole idea is cheaper and faster go to market, right? Because you are a neobank, you've been funded by people, and then you want to go to market fast. So you don't have time, because time is money. So they launch with a product called current account, or a saving a deposit account, or a one person lending, or a overdraft functionality. They don't launch with a larger uh, kind of product portfolio that other large DBS, UOB, or OCBCs of the world have. So that's one limit, and that's because, and eventually the plan is to get to that stage. But when they launch with few product categories as well. Now, in many cases, second point is a banking license. So now Singapore, as I said, is letting as 5 digital banking licenses are coming up. So many regimes do not allow, central banks do not allow. Digital pure play fintech type of banking license, but the things are changing fast. So there's a little challenge. So a lot of banks have come initially when they started out, they started with a prepaid top-up card which doesn't require a typical banking license, and slowly they migrate towards taking deposits and other products when the banking regulation and all kind of improve in their favor. So they have that kind of journey as well. Now, other thing, when fintechs are started, they are started with a very revolutionary kind of thought process, thinkers and tech enthusiasts, and I'm going to change the world and disruptors kind of people, which perhaps might not have the banking and the regulatory and the compliance knowledge. And one thing, everything can change in banking, but one thing will remain same, is the regulatory and compliance. So you have to have a very good understanding. I'm not saying that fintechs do not cannot. Of course, you can get hire people, and you can onboard a lot of people that have a lot of experience. But when they start out, that kind of little knowledge is missing when they start out. And of course, when they grow, when they start setting up team, they have regulatory and people in expert in regulatory and compliance. But in the beginning days, they're always kind of short on that kind of skills at times. Now, revenue model, as I said, is very straightforward. It's similar to what your banks have. You have transaction fees, which I talked about earlier, that when you swipe your card, that 45 cents could be divided into 0.00 cents among different party, visas, merchant bank, and acquiring by issuer bank, and all the stuff. So that some of the digital banks are doing a premium services like the black card, which has free insurance and travel insurance officer. So they charge you $10 per month kind of subscription fee. I think Revolut also has that similar model. So some have that premium, that if you open a premium account, I'll charge you a fee per customer. The third one is an interesting one where they have a marketplace models as well. And sorry, there are other revenue models as well, like investment. And I'm just kind of giving you a broad stroke revenue models, but the four key models that most of the digital banks that are coming up with. Marketplace model is very simple, that a lot of digital bank have open banking platform, and they allow regulated entity to tap into the existing customer base. So if I am, let's say, a Starling Bank, and I have current account there, and if someone sells insurance to me as a customer there, so Starling Bank or some whatever bank that has started has the account system can get $2 or $3 fee from that transaction. I'm not saying it's $2, $3. I'm just telling you that there's a fee that you can make. So that's what we call it, the marketplace model. And of course, lending model, as you know, lending is big, and that's the largest revenue source in any banking. And there are other revenue models as well, but I just wanted to kind of talk about the main. So those are the things. Let's talk about ASEAN and Philippines in particular. McKinsey did a research in 4 or 5 years ago when they mentioned that, and they surveyed people from ASEAN and Asia as well, and 40% of the people that were surveyed, they said that they will switch to a digital banking proposition if there is in my country. And this is 4 or 5 years ago, where digital banking was not that popular. I'm sure if you do the same survey now, that would be higher, definitely, because people are getting exposed to what digital banks and is all about. Also, in their research, they mentioned that 35% of the world banking revenue would be under threat from neobanks. That's a large number, right? 35%. Suddenly, you have that. And one thing that South Asia and Southeast Asia is rife with the unbanked population. So I've just mentioned few of the countries out there, and of course Singapore is definitely missing from there, because as I said, Singapore is anomaly in this part of the world. It's an advanced developed country market. But if you look at countries like Bangladesh, 50% are unbanked. Indonesia, 52. You look at Myanmar, 70% are unbanked. Philippines, almost 70%. Vietnam, close to 70%. These figures would have gone slightly better now, but you can still see there's a large unbanked population. Now, what it makes is also interesting. If you look at the mobile penetration, you have a large amount of mobile penetration. So I'll just pick up Philippines, and as Philippines has 75, while it has a 116% mobile penetration, that means one person has 75% of the penetration is actually smartphone, because thanks to the Chinese manufacturer, the cost of smartphones are very affordable, right? So everyone can have a smartphone, and that thing is going to go down in the time. So smartphone will become the Nokia of what it used to be when the mobile phones were launched. So that's the interesting thing, and that's what is powering the thought process of fintechs and digital banking and stuff. On the last two columns, it's very interesting. If you look at the last two columns, it's borrowing from a financial institution is very low. So there is a lot of borrowing need, but majority of the inclusion segments and people are actually borrowing from a non-informal institutions, and mostly loan sharks and private lending companies and stuff. So you can see the huge kind of an opportunity. Like Philippines alone, only 10% of people who borrowed from a formal bank or a formal institution. So you can see how much scope you have from a lending. And then you have a large loan sharks kind of a illegal kind of a digital lending market that's coming up and addressing that need. So there's a huge demand from that perspective, not just the deposit and the saving account. From a lending perspective, these markets are largely kind of available for a very good proposition that can actually help them, in terms of borrowing and accounts and deposits and current account. So this is the kind of a context I wanted to. Now I want to go back to Philippines. Why Philippines? Why were we interested in applying for a license there? The Philippines has one of the most progressive regulators, Bank Central Philippines. They are very fintech friendly. In fact, because one reason why they are fintech friendly is because A, they are forward-looking regulator, and B, because Philippines has the highest percentage of unbanked people in the world. Almost 70% of the population does not have a bank account. So that triggered them to be more progressive and forthcoming with regulation and circulars. So they had agent banking model that they had deployed was about quite a few years back, where you can do cash in, cash out at a small shop. They had onboarding to be done digitally. That circular came out a while back as well. They haven't come out with a digital banking category license as such, but they're working on it. But they're allowing digital bank to open up without even having a license of sorts. They're giving, okay, apply this category and you are a digital bank. So they've been very progressive in terms. And of course, Philippines economy, as you saw, is growing. Mobile penetration is high. Your internet penetration is high. And even yes, the market has been marred by COVID, but it's going. World Bank suggests that it's going to bounce back faster among all of the ASEAN countries as well. So it is a very interesting country, and in a good days they have 30 billion of remittances from overseas Filipinos as well. So a lot of remittances and stock market stuff. And of course, as I mentioned, 70% of the people are unbanked, so there's no rocket science. And there's a large number of population of people that keep money at home, savings still, because the interest rates are so low that they don't want to line up and in the bank and deposit money. So they have a small stash at the home, hidden in the shoe boxes or in the cupboards, and or little lockers themselves. So they're not now, a lot of money is just lying in little saving and piggy banks in the house as well. And as I mentioned, large unorganized lending, 50% of the loans are from unorganized sector, which is very good for a digital bank or any bank to actually tap onto and actually help people. And on the right, you'll see a big 50% interest rate plus. The unorganized lending sector can charge you 20% a month. That is 240% per annum interest as well, because at an unbanked segment, the interest rates are phenomenally high. And it's I feel that's a crime. And I think that poor people needs to be have to have some access of cash, which is not as such a high exorbitant price interest rate. But you can see still you have even the digital lenders, 50% onwards all the way they go up. And then if you go to Loan Shark, they will charge you about 200 plus interest as well per annum. But of course, in the inclusion segment, majority of the lending requirements tend to be short term, like month or two. So the charge outs on interest are quite high in those kind of areas as well. So that's why we picked up Philippines, an amazing market, amazing regulator. So that's a quick kind of introduction on. And another thing, landscape. Philippines has about 40 plus universal large banks, including some global banks as well. And they have amazing numbers of hundreds and hundreds of rural banks. They have microfinance and non-banking financial organizations that are not represented here. So they have a lot of smaller NBFCs environment as well in different smaller parts of the city. Again, this whole banking infrastructure is led by legacy people, process, and tech. The cost base is high. The deposit interest on deposits are really low, and they lack agility at the same time as well. But what has happened in Philippines in the last 5-7 years, there has been a large uptake of wallets and wallets. The one thing about wallets is they have started to look like bank, but the only thing, they can't take deposits. But they have payment functionality, transfer, remittances, the investments, and some wallets are offering Visa or MasterCard as well. So, but they still score low on the trust, because they are not trusted as the bank trust. Now, the flip side, the other thing, interesting part in ASEAN is people in Europe don't trust banks, but in ASEAN, people do trust banks. So that's a flip side, yeah. So it's a slightly different environment. So the trust is high among, whether they're slow, understandable, not convenient, but the trust is high. So Gcash, which is owned by Globe Telecom, has about 20 million subscribers in Philippines. That's quite a large number for a 100 million population. That's what they claim. And PMIA, which is smart, which is also a telco, is would be around 15 million or so. The figures keep on changing. Then about GrabPay and Gojek, and these have started to actually do lending and stuff in the platforms as well. And they're trying to be super apps. So you can see a lot of fintechy, banky kind of orientation among these wallets that's happening. And I think Gcash and PMIA got money from Ant Financial and Tencent as well. The large investment came from Chinese funds as well. And the last is there have been recent launches of digital bank in Philippines. Now, CIMB per se is not a digital bank; it's a traditional Malaysian bank. But in Philippines, it's only a digital bank. They haven't opened branches. Same with ING as well. It's a large bank, global bank, but they haven't opened a branch banking. They have opened a digital bank. Eon is a avatar of Union Bank, which is a local bank, but is a digital banking proposition. So the next bank that are launching would be pure play digital banks as well. So yes, CIMB, ING, and now when they launched their digital banking proposition in this market, they also had a very MVP, quick go-to-market approach where the product depth was very limited. Like CIMB started with just a deposit kind of an account, and now they have personal lending and loans in their app as well. ING still, I think, is still on the deposit kind of range, and they don't have other products or that traditional bank would have. So the depth is still missing, but they just wanted to have a quick go to market, and they launched their site. And there have been a lot of downloads. Like CIMB launched about a year plus. They already have 2 million downloads of the app. They might not be all active, but you can see that if so many people are downloading, there's some excitement around the segment. But I can tell you that in terms of active usage, it would be low, but in terms of absolute consumer, it's quite high. That's a quick kind of scenario on stuff. Now, the key challenges that I'm looking from a Philippine perspective, but these challenges could be in Indonesia and Vietnam, could have the similar kind of challenges as well. We got to understand that majority of the population, especially unbanked, are low income group. You know, the per capita GDP per capita is in Philippines 3,100, not much from Indonesia, Vietnam, and other markets as well. So what the banks need to do is keep the cost of operation as low as possible. Now, the traditional banks has always been challenged in this, but digital banks are smarter. But when you come into the technology landscape, for a digital bank, yes, we might not have buildings or large branches, but there's a large technology cost that's also. So we need to build our platform and technology in such a way that we ensure that the cost is kept to as minimal as possible, and the platform is built as robust as possible. So that's one thing. Now, in Philippines and some other ASEAN countries, there's a low digital banking usage. It means people are not even using internet banking to the max in a lot of ASEAN markets. I'm not talking about Singapore and Malaysia. I'm talking about Philippines and other markets which are emerging, because a lot of people still mistrust the online banking. They said that security, people can hack if they use. So you'll still see people queuing up in Philippines. Not everyone, but this is changing. This is definitely changing. More and more people are getting digital, the confidence on digital and online banking. But when you start to build a bank which is digital, purely digital in nature, we need to be very sure that we start building the trust and the security dimension in the mind of consumer before we even launch the bank. And it is very important to build that trust. And mind you, when I mentioned the traditional bank have a high interest in these markets. Lending from organized sector, the third point, is dependent on traditional scoring model. Now, in Philippines or other markets, your credit bureau is very limited. And if you have to go with the typical credit bureau kind of risk assessment and scoring models, your market size is only 20% of the market size. Now, what do you do? So you end up building your own risk scoring models. You start building your own security. So this is the difference between the digital bank and the traditional bank. The digital bank and fintechs are building these things from day one, where they're tapping into alternate data sources. Like they might be ride hailing data, they might be getting data from e-commerce sites, from billers, from telcos, from social media, and creating those models based on different data feeds that are coming in. So that's what we need to build, and we are building in these markets as well. Now, another thing is they are digital savvy population, but I think this data 99% is slightly late 2018. It has improved now for sure, but still the usage of cash is still king in Philippines and some of the ASEAN markets. And then you can even, when the security and the trust dimension try to build up, you can have personal financial management and budgeting guide modules and usage-based program that can actually drive that usage of the transaction to your mobile transaction or a card transaction. Because mind you, there is a lot of fees, that is transaction fees that comes out of those transactions. Now, another thing is if you go at the lower, and my second last point, need for human interaction, especially at the lower segments, goes higher. So you need to deliver models like service agents. Yes, if you are a mass affluent or an emerging affluent, you don't really need that because you are savvy and you are confident about how the app is going to work and stuff. But there might be some help required at the inclusion segment. So we looked into direct service agents, like people with iPad going into suburbs and all the stuff, or agent banking models. Can we convert a large chain into like branches of sort as well? So that needs to be looked upon as well. High fee for cash in cash out, like when some places they might not have ATMs, so you need to convert small shops into your cash agents where you can deposit cash and withdraw cash in the small villages somewhere. Now some of the cash, let's say if a person from inclusion segment applying for a loan and I release 10,000 peso, at times the cash out agents can charge you 1,000 peso, which is 10% of that cost, which is phenomenally high. So we need to work out with partners and create some models which are symbiotic, so that they are not charged too much when they're cashing in and cashing out on the model, because if the charge outs are too high, that deters them from banking. So that's what needs to be kind of addressed in the inclusion segment space as well. So that was like a top line kind of challenges. Of course there are many challenges, but I thought I'll just share some of them with you. Last but not least, technology architecture, and this is the most interesting part of the discussion, because technology has evolved. It's not the same as it used to be, and it's evolving. Means like even me being in the industry, I sometimes come across the technology providers which are completely new, and I say, oh, I didn't know about it. So it's changing so fast that even if you are in the field, that you have to be proactively looking for changes that are happening in the front end. What can you deploy and what can you optimize in terms of cost and technology and processes as well. So let's look at the technology architecture. Very simple. This is a very simplistic architecture. I'm sure there are a lot more pipes and boxes there, but I thought I'll keep it simple. You have a public app store where you download your mobile app, Android or iOS, mostly Android in our region because iOS penetration is low in ASEAN. I'm not talking about, again, Singapore. I'm talking about Philippines, Indonesia, and other markets, Myanmar, and other markets. Then you have agents and retail customer who can also go into a website and actually onboard and people and do their transaction. Then we have a large component of call center, which is I'm talking about the front end layers right now where people interact with, and the ATMs, which are usually the partner ATMs that you piggyback on. Then you have your digital banking layer. In this digital banking layer, you have different microservices, application programming interface. That's the messaging kind of services where you create your transaction module, PFM modules, deposit modules. All those modules are built in the whole environment, and they are kind of a containerized kind of application. They are not bolted or built in. They can build it separately. And the way the digital banks are building and fintechs are building their microservices and containerized environment is you can actually take one service and product out and plug it in, or plug new services in a very fast and efficient manner. But if you talk about monolithic technology architecture that traditional banks have built, it's very hard to make those changes. But digital banks are much more kind of agile and much more flexible in terms of introducing new services or products to the market. Now then, below it is a core banking layer, which is all your banking and your transaction, your product, your customer information file, your deposit, your product, your loan accounts, everything is sitting there. Every time you do a transaction on ATM, everything is goes into the ledger, and essentially everything, all your transaction history, all the products, everything is set up in the core banking layer. And then you have agent wallet as well. You can plug it in as well. Then fraud systems, anti-money laundering system, KYC is the onboarding of mobile systems, CRM systems and stuff as well. The last layer, which has card management system, all your card, basically credit card, debit card, when you activate your card, freeze unfreeze your card transaction, everything is stored, and this card management system talks to your core banking system as well. Then you have payment processors, which are Master and Visa. Without these people available, you can't know who's paying for who, so it is very important. And that also we have local payment processors like BankNet and Nets in Singapore and stuff. And then we can have multiple partnership. We can have remittance partnership with Western Union. You can plug it in. So multiple level of partnership can actually be plugged into the digital banking environment as well. So very simplistic kind of architecture, but you will see that there are different type of layers in it. And this is how the whole technology architectures and layers actually works. My last slide, an interesting slide. I call it the spend paradox. I was just Googling and I read that JP Morgan spent 11.4 billion in technology budget. Bank of America as IT budget is 10 billion, Wells Fargo 9 billion, Citigroup Global 8 billion. That's a huge investment of technology per year. And there's a chart below that's from Bloomberg that has Singapore on the extreme right, the big blue bar. The three big banks, DBS, OCBC, UOB, spend about 1.4 billion in technology per annum. Again, this figure is from Bloomberg. I don't know exactly how much they're spending, but 1.4 billion. And on the other side, because my personal experience, you can actually launch a bank for 3 to 5 million US dollars. Again, the technology, processes, everything. We're not dealing with legacy and stuff. It's not easy. And of course, digital DBS and JP Morgan and Citi has to spend way higher, A, because of the legacy systems, and B, they have a large customer base as well. So I can't do that. But all I want to say, leave you thought with, yes, they are bloated in terms of investment, and that is because of legacy and a lot of systems as well. But in terms of launching a digital bank and managing, it requires less effort, less money compared to the large banks that are around the system. So that's my last slide. I'm happy to answer your questions if you have any, and happy to engage. Please let me know if you have any questions.
Thank you, Mr. Bahuguna. Thank you very much. I have a question, if I may, please.
Yeah.
You know, as I was listening to what you had shared, and this whole aspect of digital banking, and something comes to mind. You know, Singapore is only now trying to appoint a digital bank licenses.
Yeah.
Why at this juncture, when clearly in Japan, South Korea, China, they have had it for a couple of years already. Some of the even other countries that you have mentioned earlier, they have all these neobanks already. Why at this juncture?
Okay, look, Singapore is a highly banked market. Okay, if you look at all the people who are working, you will find 3 or 4 credit cards in their wallets, and they will have multiple bank accounts. A very saturated bank market. So now I will tell you my perspective. Why? The reason, and it's a highly banked. So the I think one reason why Singapore want to open up the digital banking license, apart from the highly saturated banking market, it was and this is my perspective. It want to position itself as a fintech hub. So you can't have a fintech hub with no banking, digital banks, right? So so that's one thing. Hong Kong had taken lead of issuing the license slightly earlier. So now, if you want to be a fintech hub, you have to let digital banks. You have to have a free market economy, right? You have to have more players to come. You you have to let go of the protection of the bank that like a lot of countries might have. So you have to let go. So they are letting go. They are letting the digital players, and they want to be serious fintech players. And you've seen Singapore Fintech Festival, amazing initiative that happens every year. Not sure it's going to happen this year, but there are a lot of initiatives the Singapore government is doing, and I think this letting licenses out is one of that, to establish itself as an authority in fintech, right? So
I think what you had touched on there is truly a point for consideration. I do know that our participants would be interested in business, and I think what you have mentioned there is so important, especially when there is a strategic consideration of what you do if you were to open too quickly to issue digital banking licenses, bearing in mind that you have your traditional banks that they, like you mentioned, you may have to protect. So I guess everything is done not with that possibility of revenue generation or making money out of a venture, but also keeping in mind if we were to open too early, what happens to the traditional banks, which by the way employs a lot of people.
Yeah.
That's interesting on its own, because what we are talking about here would be a strategic considerations, isn't it?
Yes, they are definitely strategic consideration, and I think what has happened is, and look, every country, every central bank has a different trajectory when it comes to that, right? And of course, central bank. One thing about central bank and regulatory bodies is to protect the consumer as much as possible. Okay, so there's some because when you let a lot of unregulated stuff come in, you also open up to a lot of risk that consumer faces as well. So some countries are extremely cautious, and some countries say, hey, this is what is required, and this change needs to happen fast, because if not, then people will not get the real value of their money or experiences with the bank. So again, different bodies have a slightly different mindset as well. Even in the developed world, some countries do not allow their banking to be on cloud, right? And if you have a on-prem, it's an expensive proposition. It's very hard for digital bank to actually come in at a very cost like that cost that I was talking about, and that cost 3 to 5 million is only possible with everything is software as a service model for me, and it's everything is on the cloud. So some countries are opening up, some are taking some time, some has already done it as well. So everyone is a different trajectory, but this is something that you can't avoid. It's going to happen, and it's going to happen across.
Like you said, Singapore is a very banked market now. It's just interesting to know that you have still people bidding for this bank license, digital bank license, and it can be even companies that are not in finance at all, but have joined a consortium. Like Sheng Siong is part of this whole a consortium by Razer to do it. What do you think is behind the thinking of these companies? Grab and Singtel, coming together, putting in a bid. Isn't the market here a bit too small, considering that, frankly, like you said, it's a very bank market. Most of us have a DBS, an OCBC digital banking account. Is there really room still for a digital bank?
Look, yes, I did mention that while the market is heavily banked, but you got to understand that Singapore has the highest per capita income in the world as well, top 5. So that's another play as well. But if you look at the players that are coming in the license, they are players with lots of cash. So they are not your fintechs like when Monzo and Revoluts of the world quickly cobble up seed funding and VC funding and started with $2 million. These players who are coming are seriously rich, cash-rich companies that are like Grab and Singtel for the matter, or other play. ByteDance I think is other ones as well. So seriously, so to enter into the Singapore market. You need to have some serious credibility already built in some other place, and you need to have serious cash. So it's not a situation where Monzo could spend 2 million or 3 million pounds and come out with a digital bank, and a fresh graduate with a couple of friends started another digital. No, it's not the case. So yes, while the market is small, the players that are coming are very big players. There's and at the same time, everyone's thinking, hey, it might be small, but per capita is one of the highest in the world. Means as I said, so there's a lot of money to be managed, and maybe there's a room for competition. However, from my perspective, if I have to launch a digital bank, I would not pick up Singapore for sure. Because a startup and stuff. So my perspective would be looking at ASEAN, Indonesia, Vietnam, Myanmar. Philippines type. As a startup person, and with the market assessment I made, I will stay away personally. But yes, there are players with a lot of cash and money. Currents are high. They will come into the frame because they might think that yes, they can make money some way or other. And the market is rich enough and not big enough, but actually rich enough as well. So yeah.
Thank you so much, Jay. I'm just looking at the group chat to see whether if there are any questions. There aren't. In which case, if I could just continue with mine, I thanks for the last slide there that plugs what is coming up next. But could we just have a look at the slide before this, which was on the technology architecture for it.
Sure. Sorry.
Because as we look at digital banking, what comes to mind immediately is in terms of the talent that you will need. You would be looking at someone who obviously, certainly from your for the building of that architecture and that platform, you will need someone that is inclined towards IT. But having set up a digital bank and with that experience, you would still need to pick up talent that has that core banking skills in the portfolio risk management, say. Am I correct to say?
Yes. Look, those skills will always be required, but those skills need to be refreshed. Like I was talking about risk models, right? So you can't bank on traditional risk models. So now the thought process of risk is it's a permanent, it's a basic thought foundation. But how you enrich that risk models through new data sources and new model, that's something that you need to learn. But essentially the risk model is a risk model, right? And how do you refresh it? How do you plug in more data? How you plug in AI and machine learning and all the stuff into it? Yes, the foundation of banking is those things would be there. Yes.
Just one slide before this, please, Mr. Pawan. So just to recap, No problem. Yeah. So there you go. Right. The core banking. So a graduate with a knowledge in banking and finance would still be sought after within the employ of a digital banking company, I am sure.
Yeah, absolutely. I think the knowledge of banking and finance, because see, operation is while we've given a digital avatar to the whole banking process, but your operations and thought process and the products and lending and all, yes, they are evolving to encompass the new technology, but those basics fundamentals are still the same.
Sure. Of course, I guess if someone has both the banking and finance knowledge, but coupled with some, say, the appreciation of coding, how do you use IT to make everything, the whole banking experience, all that more convenient to a customer? That definitely helps.
Yeah, I think less of coding experience, but more of how this technology comes into play, because these are all different boxes, like, and how do they work all together and stuff like that. So understanding of this would be good for sure. But I think the most importantly, as I said, from a basic product construct perspective, like lending product, deposit products, and investment products, insurance products, I think that the fundamentals are there. Fundamentals are not changing. It's just how we are changing the product and how we are engaging the product with the consumer with that product is changing.
Thank you so much. If you could just allow me to share screen, please.
Sure.
Thanks, Mr. Pawan. Just like to mention to our participants who are here with us, on the chat function, you will see details of my colleagues who are our sales consultants. They'll be able to advise you further if you have any questions about taking a program on banking and finance, say. Okay, if that's your interest, or even any general business program. All right. Just wanted to quickly highlight that, like what Mr. Pawan mentioned, at the business school we do have a program called the MBA in Banking and Finance. Okay, and in this program, all that core banking knowledge and skills is taught. Okay, as I scroll down this page, and I hope everyone can see it. Yep. You would see that everyone can see it, right? Just a quick thumbs up from Lawrence. Yep. Okay. Investment strategy, portfolio management, strategic management. We just heard that that's so very important. Bank financial management, international financial management, okay, and you can apply all your skills in applied business projects as well. We have this program, it's by a UK university, highly recognized. Many of our graduates, even as international students, are able to get a job upon graduating with a bachelor or a master or an MBA from Bangor University. Okay, I thought I'd just like to quickly share that with everyone. For example, I'm made to understand as well that in the area of this international banking, that very module, yeah, that very module, you will definitely get that understanding about the fintech, like what Mr. Pawan mentioned. Pawan, over to you, Pawan. I think you have a final slide to trail.
Yes, if you can unshare the screen. Yeah. Okay, let me share. And this one.
So please do join us for our next talk. This is at 3 p.m., which is in a minute's time. And you would hear from Ms. Juliana if you are at that age whereby you are looking at maybe doing your or A levels. Okay. Thank you so much, Mr. Pawan. Thank you so much.
Thank you, guys.
Everything.
My pleasure. Yeah. Thank you. Thank you for inviting me over. Thank you.
Thank you.
Cheers.
Thank you. Yeah.
Bye.
Atika, anything else?
Oh, it's all right. We are okay.
Okay. Thanks, participants. Thanks for the afternoon. And thanks for the great insights, Mr. Pawan.
Thank you.
Thank you.
Have a good afternoon. Thank you, guys.
Thank you.